Hello everybody, welcome back to another market analysis video. This is Taylor Moe with True Trade LLC, and it's been quite a week or two in the markets. I haven't updated for 2 weeks. I was moving into a new place last weekend and didn't get the chance to make a video, but we're going to go ahead and go over the indices today. Not really any reason to cover individual stocks. I might look at Tesla, I guess. That one's been moving a lot. But yeah, let's just go over the indices, talk about what's going on. Is this bearish? Is it bullish? Should we be cautious? And I'm going to go into a little bit of detail on how to trade this environment because, it's obviously a little bit different than what we've been seeing for a while. And I think we could expect it to potentially continue for a little bit. So let's go ahead and dive into it. Let's start with the SPY daily here. I posted on my Twitter that this was really the key area, the key VWAP that we were looking at, specifically because you can see these boxes that I drew. The market has responded to it every time we've come down to it. And once again, the market has come down, come to that general area, and we've seen a big relief bounce off of that area. So it's an area that we're going to continue to watch from a daily chart perspective. Are we going to hold under it? Or are we going to continue showing strength on the short-term time frames and actually continue back up? You can see we just really came down near the primary uptrend, and it's possible we come down, double bottom, whatever, or maybe break it. But, this is the primary uptrend, and so we'll continue to watch that and monitor that. And, it just shows that, hey, we really are still in this major channel. And so from a long-term perspective, okay, maybe there's nothing to worry about. But let's go ahead and move down and look at the short term and what's going on here. Let's actually go to a 65. Okay. So, the major trend is obviously still down. I don't think this bounce was anything to get excited about, at least for now. As a trader, from an intermediate perspective, we can't really be bullish off of this bounce. It was a very nice bounce, but I think what you need to see here is actually some sort of balance. So I posted on my Twitter that the market really needs to balance above the 383 to 384 area. And you can see that's pretty much where we came up to and right where we closed. And the reason for this is mainly because, okay, we had this support, right? We were kind of holding in here. We were holding in here. We held all in here, and so the market broke down from that area. We got back up, and so in order for the trend to really shift, we have to see some sort of balance in this area, and then a move higher. And so without that, this is really just a dead cat bounce, and it just depends on the price action that we see Monday, Tuesday, Wednesday. So the first option is that sort of balance and break up and a real trend shift. That's where we can start to look for more bullish trades. I still think with this crazy volatility, we have to be careful getting too confident in the bullish case. But I think if we do see that setup, we can at least look for short-term upside. And, if it leads to the top of this channel, then great, keep playing it. The other option is Sunday futures or Monday, Tuesday, we actually, maybe come up and test this breakdown area, test this downtrend here, and we actually fall back down. And that's definitely a scenario that we can look for if we don't start to create this balance up here. And in that case, we'll continue to look to place short-term trades on the market. I am still looking to sell rallies unless we really get this balance and the market shows me that we are bullish. And the main reason for that is a lot of indices are looking pretty bad. There's a few that are actually under their 50-day moving average, including the Qs. We'll go skip over the daily of the Qs right now. Obviously, they've been leading to the downside with names like Tesla and the Trade Desk and a lot of these big names that are heavily weighted in this index. They're not doing well, for the moment. And so the Qs, their 50 days actually starting to trend down. That's never a situation that you want to be bullish in. If the market is in that situation, You can see that every time the market gets below a declining 50-day moving average, you want to be careful, because typically you're going to bounce up there and that rally is going to get sold, and you're going to create some sort of really volatile range. You can see it happened here. You can see it happened here. There's always at least one rally up to that 50-day that gets sold, generally speaking. And so I think that's, if anything, that's what we want to look for, is a rally a little bit higher. You come up, and on these indices you maybe test this breakdown area. So you can see we came up, we ranged, and then right here we had this support here, and then boom, we broke down. And there's even one right here as well. We came up, broke down. So those are two areas that we want to watch for. That 50-day moving average is more up here. So it's definitely possible we get a big bounce and then that actually gets sold. You really got to stay nimble in this kind of situation. Trade the short-term time frames, really just day trading. And we're going to go into shorter time frames now, and I'm just going to talk about what you want to look for when you're trading the indices when they're really volatile like this, because there's a lot of opportunity, guys. And if you don't really know what you're doing, I've seen people on Twitter that go ahead and they say, I'm taking the day off, or, there's just nothing that looks good to me. And as traders in this environment, I just kind of laugh at that, because this is the most opportunity that you get to make money in the market. And it only happens every once in a while when you get really crazy environments like this. And I'm not saying it's easy by any means, but I don't think that it's an environment that you should just sit back and not play. And so hopefully by going over these shorter term time frames, I can help you understand a little bit of how you could play this. So let's just look at the last week. So we know from when we looked at the 30-minute, the intermediate time frames, that we started to shift that trend down. And so we always get cautious when that trend turns down, because that's really the major trend as traders we want to look at, is that 30 to 60 minute trend. Is it up or down? And that can kind of tell us what to look for intraday. And so in here, we're getting cautious, especially as this starts to roll over here. We were shorting in here, shorting these pops, because that trend was turning down and the market was giving us that signal. And especially here, guys. So you see how we came down here. This is something you always want to look for, especially when a market's rolling over. So you have this dead cat bounce, and this is beautiful because we had this range right in here. And so this is something you always want to look for when a market's about to drop. This was beautiful because it built this range, and so you can see this is a really important inflection area. So when it's below it, you want to sell rips, sell rallies, and then when it's above it, you want to buy that area. And as it comes down and it keeps testing it, right? So you have one, and then it's down again, it's testing it, and it's not really getting that same reaction. This is where you really want to look to short. Especially as you get the consolidation here and then it actually breaks down and starts holding under here. You really want to look to sell, because that's showing you, hey, this was the bull's chance right here to regain control, and they were not doing it. And so as you come in here, you just want to look for these areas of value, areas where price spent a good amount of time. And so you can see, after we held under here for a bit, we had this area about right here. You can see price spent a lot of time in there. And so if you break down from an area like that, retest, that's where you want to look to short. Okay, so break down areas, because that's where you have this volume that's done. So maybe you have longs in here and in here that are trapped. And so they see this, and maybe they only stop out of some, right? Maybe they're a long-term trader over a few days, and they see this, but they're still holding, and we get up here, and some of them kind of sell because they're a little freaked out, and you build even more volume here, and then boom, right? As you test that breakdown area, the trade's working, and to stop out of something like that, maybe you want to use a 30-minute close over some area here, maybe this pivot high or this pivot high, or even here, right? You'd start taking trades up in this area and you place your stop. And as it starts to work for you, right, maybe you get this big red candle and you test this area again, and then you get another big red candle. Maybe you start adding on size at that point, right? Because we're looking at a 5-minute chart here. You can start adding on size, place those new stops maybe over this high right here, and just continue riding this, right? Continue riding it into the next major support that's right. So this was the actual low here that we made. So right, you ride it into these pivots. So and that can be a huge trade, especially if you're adding on that size. But you got to be active. You got to be paying attention. And I got to say, I'm not really proud of how I played this week. I did okay for myself, but I'm a little upset because it was a huge opportunity, and I didn't pull the money out of the market that I should have, and I still did well for myself. But when I look back, and this is something you should do, guys. I've been looking back at these days on Tesla, on SPY, on everything, and just going over, hey, like, where could I have added? Where should I have seen an entry trigger and been in quicker? Is there a spot that you didn't pull the trigger quick enough? Maybe you got scared. Is there a spot where you got stopped out and then it went for you? Was your stop in a good place, or was it kind of crappy? Maybe you shouldn't have gotten stopped out. These are important times to look back at how you traded and see what you can do better, because if you can trade this type of environment well, you're going to do really well for yourself. This can make your month, can make your year, this environment right here. So definitely look back and study this stuff. And so when we're looking for trend changes, we came down to a really important support, some good pivots, and we get this bounce. And so again, we can look, and we came up and we actually tested this breakdown area, right? So we had this pivot here, we fell, we got this little bit of a bounce, and then we got a bunch of red candles in a row. And then this is another one here. You got this value area and a breakdown. And so as a day trader, you can look, right, when you come up to this area, look for signs of a trend change, right? So if you're on a 1-minute chart, look for some sort of consolidation at this high. So you can see we actually came up. Here's a little consolidation. We came down. Here's another bar that kind of consolidated here. And then we got this breakdown. And then so you can look to short that, right? Look to get in short, place your stops above this high. Obviously, this one didn't work quite as well because we've already dropped so high and the trend was starting to change. I think this was a really good short, though, because we gapped up and immediately on the shorter term time frames, we start selling off. And so at that point, you can get short and place your stop literally above the day's high. And that worked pretty well. Play it down to the gap, take some profit, and move your stops into profit so you're not going red on the trade. And look, it worked out really well on this trade. Okay, and then now how do we identify that the trend is actually starting to change? And it's similar to up here, guys, when we had this range and then we actually came back below it. There's a really similar thing here where we were holding this, and you see this fake breakdown, we get back above it, right? And then we actually make a new high here. And as we come down, we get below this area again. And so as shorter term traders, what you want to look for on this is this false breakdown again, because now you have this level, right? Maybe you couldn't play this because you didn't really know that this was a good level, but look how clean it is, right? We had 4, 5, 6 reactions off of that area. And as we get this fake breakdown and boom, this break up here, you start to look to get long with a stop under that low. And as you do that, you look for this move, and you have all the shorts in here that are going to have to run for cover, and that's exactly what happened here. And I was posting on Twitter that 375.30, and that's going to be right about here. I was posting on my Twitter that, hey, if we're above 375.30, that you do not want to be short, and that 378 or higher can be visited, or 380, I said, sorry. And that was simply by looking at this, reading this price action here, and seeing this fake breakdown and saying, hey, you don't want to be short if that's happening. And it's really simple, right? It doesn't require any voodoo magic, right? It's simply looking at this level, looking at we're at a really important area from a daily chart perspective, and saying, hey, like, this could be a short-term bottom or even a long-term bottom. And if you place, you can place a trade off that, and it's huge. I mean, if you're playing options, these are the kind of environments where you can play same-day options all day, every day, make hundreds of % return. It's great. It can make your year. So at this point, guys, I'm really just cautious. I'm waiting to see if there's a value area that builds. If not, we're going to continue to play these intraday volatile moves. And I definitely won't complain if we continue lower, because it's fun. It's a fun environment. Let's just take a look really quickly at Tesla. And again, this is one where it's a good short. Whenever you have a big breakdown and then you just start consolidating, especially when you have a big move down, and I think I would have liked for this to actually consolidate a bit more here and then break down. But I did short this. We did get short on this, and I was not here around this time, but the rest of our group actually caught this bounce. And so Tesla was an amazing trading vehicle, especially Friday, same day options. Those things went absolutely nuts. And it's nearly, what is it, like 40% from its high at this point. But we have to remember this trend, this intermediate trend, it's still down, and it's down on everything. And so we cannot be bullish on anything unless we're looking at a very short-term trade. But guys, you want to be really small size on any longs. You want to be looking to short rallies. And the really important area for Tesla is right down here. This is the only real structure it has, guys. The only area of volume that really is between about 600 and here, right, is here. So there's just not very much volume done in this area here, you can see. And so when there's no liquidity, you can see what happens, right? This type of stuff happens, that huge drop. And so if we're coming back down and we're visiting this area again at all, I'm not saying it's going to happen, but, right, so basically this happened. We got this, right, same thing here, this. And so if we start to build that range for a little bit and then start to break down again, that's going to be another short for me. And I would look for it to come down and test the 500 to like 460 area. And I know that sounds crazy, but really just read the price action, respond. If Tesla can start getting back above, right, so we look for those fake breakdowns. So we had kind of this area in here. If we go down, we had this area in here where it was holding. And so if Tesla's going to really make this trend shift, what you want to see is that fake breakdown. We get back above here, we start holding, and then we move higher. And that's what would get me to be short-term bullish on Tesla again, and look for it to maybe come up here and test this value area up more near the high 700s, right? And so that can take multiple days or even weeks, but that's what I'd look for to actually go back bullish on Tesla and look to make bullish trades on it, other than just short-term bounces. Okay. Hopefully this helped. I know it was a little lengthy, but I wanted to help you guys out and hopefully help you guys navigate this tough market a little better. If you enjoyed, like the video, subscribe, and share it with anybody that you think could find use out of it. I'll see you guys in the next one. Peace.